listen, I do like the stock. I do think, I could go on and on and talking about all these negative headlines this year, this week, over the past year or so. But I think what's most important for investors about Facebook is whether or not these negative headlines is putting pressure on user growth, whether or not users are fleeing the platform, and whether or not advertisers are fleeing the platform. And I spent this morning going through my data on monthly active users and daily active users. I'm not seeing people leaving the platforms en masse. I'm definitely for Instagram, for WhatsApp, and for Messenger, the user growth is up and to the right. And so I think that's a positive. And second, when I speak to advertisers about Facebook, particularly headed into the fourth quarter, they're telling me that, yes, they are paying attention to the negative headlines, but they actually plan to increase their advertising budgets headed into the fourth quarter, mainly because Facebook is such a hyper-targeted platform that there's no other alternative that they see that could match that. What's important for investors longer term on Facebook is right now the stock is trading at sub 9 times EBITDA versus a peak of 17 times. And so what are you paying for that? There's a 4-app platform, 2 billion monthly active users, close to a third of the world's population. I think those numbers can continue to grow, and the per-user monetization rate will continue to grow. You have Facebook and Instagram both developing into video platforms that could rival YouTube over time. You have the fact that there's optionality in terms of monetizing virtual reality, augmented reality. There's WhatsApp, Messenger. Those are both potentially multi-billion-dollar revenue platforms over time. And also, 2019, I think, will be somewhat of a peak investment year for them. So you have significant earnings growth after that. And what most people don't talk about is, in spite of their heavy investments, they're still generating significant free cash flow in this platform. So, I still like the stock. Amidst all of this volatility with the stock, I have actually made Facebook my top large cap pick over the next year.
Well, this is a pretty serious crisis. If you look at the stakeholders involved, shareholders obviously no longer want to hold the stock, and you're seeing the stock collapse. And if you look at employee morale, it's incredibly low, and founders who sold their company to Facebook, to Zuckerberg, and made billions of dollars have been incredibly critical of Mark Zuckerberg, which is pretty incredible when you think about it. You give somebody a couple of $1 billion and then they criticize you on the way out the door. It's pretty unheard of. But advertisers still love the platform. So anecdotally, the companies I work with, private companies, it is the only game in town to reach users at this level of scale. And one has to wonder if the fourth constituent, which is governments around the world, are going to put up with their democracies being compromised. So you put those four stakeholders together, this is a true crisis for Facebook. And I think this could be, it's possible, maybe not probable, but possible, this could be their AOL peak, this Yahoo peak. Those companies peaked with hundreds of millions of users, in AOL's case 30 million plus paid users, and it took a decade or two for those companies to deprecate. Facebook's a whole different scale. It's 2.5 billion people, so I don't think they're going anywhere anytime soon, and the advertisers still love it, and the advertisers are going to always go to the platform that has the lowest customer acquisition cost.
Now, obviously, the regulatory overhang and the declining view on Zuckerberg and management team is getting the most attention, rightfully so, from the media. But I think if you go back to that earnings report back in July, I mean, they missed across the board. And what really jumps out at me is that we're seeing decliner daily and monthly active users in North America, or stalling, active user metrics in North America, declining in Europe. And the only regions they're seeing growth is in Asia, where the average revenue per user is much lower than the Western world. And then like I said, Instagram, they are banking more on stories ramping up, and they really are tinkering with that. Probably led to the co-founders bailing on that venture. And there's a lot of uncertainties with the story. And I think the decline in popularity of the core is at the heart of it. But I do think if you go out and you talk to especially younger generation of the population, there is increasing frustration with the popularity. And I think that's why Zuckerberg has realized that they really have to monetize and ramp up their advertising on Instagram stories as quickly as possible. And the issue is advertisements on Instagram monetize at a 30% lower ratio than news feeds. So there's a real risk that there could be a saturation problem on Instagram very, very quickly, and which could turn away their user base. And I think that's the million-dollar question Jason touched on as well. There is an increasing view that the platform is becoming very toxic, and I think a lot of people with younger kids hope that social media overall looks a lot different than it currently does 10 years down the road.